Don't worry, we are friends.
GM friends, and welcome back to another episode on the Frens Validator show. If this is your first rodeo, I'm your host, Juri Maibaum, and this show is the hub that brings together crypto pioneers, exciting projects, and a thriving community. We at Frens Validator are a core contributor to the staking sector and believe that it will grow into a multi-billion-dollar industry over the next couple of years. On the show, you will learn how to profit from the proof of stake run-up, how to make money in crypto with staking, and how to stay ahead of the curve. If this sounds interesting to you and you want to stay ahead of the curve, then subscribe to this show. And in today's episode, I'm sitting down with Makoto from Pell Network. And Pell Network is about to launch. It is a restaking protocol for Bitcoin. And in today's episode, we are going to talk a little bit about why there's so much demand for staking, liquid staking, and restaking in Bitcoin, which is supposed to be a Bitcoin, like a proof of work ecosystem, DeFi on Bitcoin, and so much more. With that being said, Makoto, welcome to the show. Good to have you here.
Hey everyone from Frens. This is Makoto from Pell Network. Very nice to be here speaking with Juri and talking about everything Bitcoin. Staking, restaking, liquid restaking, and what's all in it, and what's Pell's role in all of this.
No, this is great. I mean, there is so much to unpack here, but before we dive into Pell Network and before we dive deeper into why there's such a strong ecosystem in the Bitcoin community right now with staking, restaking, and so on and so forth, let's set the ground, let's set the floor for this episode. So, as mentioned in the intro, Bitcoin is the proof of work ecosystem actually, and all of a sudden staking has become so popular. We are talking about Bitcoin staking via Babylon. We are talking about liquid staking via Lombard, for example, or Lorenzo. And then there's you guys with restaking. So why has this become a thing? Was it like stupidly saying just greed because there were a lot of people who have their Bitcoin and say, hey, I want to earn a yield on this, and now we're trying to force a narrative, or is there more behind?
Yeah, I think that's a fantastic question to probably begin the discussion. I mean, I myself have been in crypto since the last cycle. And actually, if you look at how Bitcoin ecosystem has evolved, there was the classic block size war. And I think, of course, the community eventually voted to actually stay on the OG chain. And Bitcoin Cash actually became sort of a branch that has gathered a smaller community around it. And then we have Lightning Network actually helped to solve, to a limited degree, the scalability issue of Bitcoin, because I think we have long complained about how much transaction Bitcoin can handle on the layer one, right? So there has always been effort in the background trying to do something on Bitcoin. But I think what made this particular cycle sort of the brooding ground for a lot of the new Bitcoin protocols or network coming up is, I think, in my view, one of the key triggers here is the recent halving that essentially actually make Bitcoin mining out of touch totally from the retail point of view. And Bitcoin has now transitioned more into an inventory mode rather than sort of an asset that can be kept on mined or minted anew. So a lot of Bitcoin holders are starting to ask the question, now what can I do with my Bitcoin? Besides sort of putting there and riding the market beta, which actually has rewarded Bitcoin holders quite well already in this cycle. It has probably been one of the best performing tokens out there. I mean, in contrast, no offense, but look at Ethereum, right? So what we see is that there has been this active push or search for yield on native Bitcoin. And I think that also coincided with a new wave of developer interest starting from, ordinals, BRC20s that actually really reopened up people's imagination. Hey, maybe we're not yet done with the Bitcoin network. So more and more of these forces coming together, I think it really became a perfect storm, where you mentioned guys like Babylon actually has come up with a very innovative, novel design of Bitcoin staking. And then we have liquid staking players like Longbar, Lorenzo that have actually also introduced very interesting solutions out there. And I think, of course, EigenLayer has pioneered in this cycle the concept of restaking to actually leverage essentially a strong crypto asset to provide the economic security for newer distributor networks. And I think for us, when we look at all of these factors coming together, we say, why don't we then do something about shared security using Bitcoin? I think I should take a quick pause there, because then we're going to lead into why we even started the Pell project. But I think that's what I see, the forces that really gradually built the momentum in the past. And I would say it's not out of a sudden we have woken up to the idea of Bitcoin ecosystem. It's just that it became a much more visible and stronger momentum in this particular market cycle.
Yes, I can totally resonate with that, especially with what you have been saying with regards to, also Bitcoin's utility at the end of the day in a proof of work ecosystem. So would you say that this new narrative shift in that sense was also necessary in order to give Bitcoin more utility, like just generally?
Yeah, definitely. I think more and more, I would say, Bitcoin holders are also coming out of the previous sort of, I would say, myopic view relatively that it is a form of digital gold. I think a lot of them, increasingly, even more of these community holders are looking to make Bitcoin a digital real estate, which means what are the more reliable, trustless, low risk yield opportunities that they can sort of get out of the Bitcoin. And I think it's the demand from this side plus the developer interest that really come together and I would say created since the beginning or late 2023 the Bitcoin ecosystem, or I think some of us call this Bitcoin Renaissance.
Yeah, the Bitcoin Renaissance. There's also like a side event hosted by Babylon called the Bitcoin Renaissance. So yeah, that's a very good point here. Yeah. But I mean, the good thing for Bitcoin is that there have been lessons learned already, because what you're trying to do here is basically build an infrastructure for projects to build on, to have like a DeFi ecosystem around Bitcoin to basically see more going on the application layer. And this is something that nobody was really thinking of, I would say 2 or 3 years ago when the DeFi mania arose. Nobody was really looking into that. Now we basically have this idea, this conception of potentially having a thriving DeFi ecosystem around Bitcoin. And one of the strong arguments for that is, well, Bitcoin is much bigger than Solana, much bigger than Ethereum, much bigger than Sui, yada, yada, yada. So the idea here is that since Bitcoin has such a high market cap, that therefore also the TVL in this DeFi ecosystem could be utilized in a tremendous way, leading to a huge DeFi spike around Bitcoin. So my question right now is, as you have seen other layer ones launched and die, specifically as someone who has been in Bitcoin for a longer period of time, were there any lessons learned from other ecosystems like Ethereum, Solana, or even past ones that failed, like Harmony, for example? Were there any lessons learned with regards to creating a sustainable DeFi ecosystem around Bitcoin, so that we basically have something that people actually use, where we have sustainable fee generation beyond just the pure speculation with regards to Bitcoin has a large market cap, therefore the TVL will be big. So what's like the game plan here, and what are the lessons learned?
Yeah, sure. I think firstly, the market cap of Bitcoin is definitely one of the key motivations and drivers for a lot of builders to actually venture into the Bitcoin space in terms of building DeFi applications and other stuff on it. I wouldn't shy away from saying that's one of the drivers that actually motivated Pell to actually start a project in this in this particular market segment because the total addressable market is just too big to ignore, right? But that is not the only factor here. And I think you're absolutely right. There has been so many other layer ones sort of having their own distinctive advantages, disadvantages, and some of them actually survive the market cycles. Ethereum, of course, being now the second biggest cryptocurrency out there, has proved basically all the crypto or DeFi innovations originated on Ethereum. And Solana has just proved that with such a passionate community and really probably become the collective of DJs in a crypto universe, how much energy and power that actually can come out and really lifted Solana from a near-death situation at the end of 2022, falling below $10, to now where we see sort of steadying above 200. And I think just in last month, it actually has surpassed the previous all-time high that was set as a record back in 2021, right? So I think what we see here is, or sort of in common of these scenarios or situation, is that you have to actually have either a super strong asset that is sitting at the foundation, which is the case for Bitcoin and Ethereum, or rather, and you would actually need a community that really come together and wanting to experiment, willing to be the early adopters, and really sort of build bit by bit to actually scale the DeFi use cases. And we see, and that is actually our, I would say, calculated bet that Bitcoin has untapped potential in this area. And I think, firstly, the users and now more developers are realizing that. And I think it's just for us unwise to even put it this way, to ignore what is happening and to actually set aside this growing momentum.
Yeah, totally understand that. I mean, also very good that you're like also so honest about the motivations here, because as you mentioned, it's relatively obvious that there's a lot of interest in why building a DeFi ecosystem around Bitcoin makes sense, and why there is definitely a demand that requires to get met, so to say. But yeah, let's talk a little bit about Pell Network now that we have set the ground for this episode. So Pell Network, as mentioned in the intro, is a restaking protocol. So we basically apply very similar primitives from Eigenlayer to Bitcoin now. So we have these liquid staking solutions for Bitcoin, such as Lombard, Lorenzo, and so forth, and so on and so forth. And now you can restake them via Pell. So can you walk us through like the high level architecture here, what Pell is here for, specifically also for developers, and yeah, how the user at the end of the day will interact with Pell Network?
Yeah, sure. I think Juri, you mentioned Eigenlayer, and I think personally to me, I have nothing but full respect to the Eigenlayer team for having coming up the idea of restaking, really improving the capital efficiency and utility of ETH as an underlying asset to actually provide economic security for additional use cases. However, one of the things that we have noticed is that Eigenlayer being very close to and as now an integral part of the EVM ecosystem is in a way limited in that aspect. If you are someone building outside of the EVM world, to actually integrate with Eigenlayer to actually benefit from the ETH security is much harder. And also, one of the fundamental value proposition of restaking is that essentially the protocol is replacing the asset that's providing the security from, say, their own native tokens to a stronger form of assets. And in Eigenlayer's case, it's primarily ETH. But if the asset strength is the key value driver of shared security, then in this regard, nothing beats BTC. And I think that is the 2 points that we noticed when we set out to build Pell. So we actually use primarily Bitcoin as the underlying asset to provide the shared security. And also we try to make, and actually that has been our design from day one, to make Pell an omni-chain network where we actually use BTC restaking to provide the economic security to any application built on any tech stack, sitting on any kind of blockchain ecosystem to be able to benefit from Bitcoin-powered security.
Fantastic. And leading me to a question that is more interesting to the builders is, I mean, you can also build something leveraging Pell Network, right? Like the restaking mechanism and so on and so forth. What kind of applications do you hope to see in the ecosystem?
Sure. So I think just to clarify a little bit, we see ourselves as an infrastructure service provider, and we specialize in providing shared security. And although in our architecture, we have a specific, I would say, special purpose layer one called Pell Chain, our intention here is not to actually build a DeFi ecosystem on top of Pell, because I think there are enough chains that are actually promoting or advocating DeFi ecosystems. So I think that's not something that we are focusing on, but rather we are integrating with multiple layer ones, layer twos. Actually, to date, we are already live on 18 different blockchains, and we're soon going to expand this into even more chains to actually work more collaboratively with different chains to actually help them strengthen their ecosystem. And when it comes to application use cases, we take it from two angles. Number one is from the Bitcoin ecosystem. As a thriving and actually still in early stage ecosystem overall, there are actually not a lot of native DeFi solutions that have actually been built purposely for Bitcoin. For example, decentralized oracles, sequencers, meta protocols, RPC nodes, bridges, so on and so forth. Although we have known these terms and have seen these applications being very active part of Ethereum, Solana, and I think some of these solutions are already trying to sort of make their way into the Bitcoin ecosystem. By actually building something native on Bitcoin is very different from building, say, on Ethereum, primarily due to the limited functionalities that are sort of available out of box from Bitcoin layer one. And that's why actually there are also multiple Bitcoin layer two solutions that have emerged, trying to actually bridge the gap or provide more programmability on top of Bitcoin layer one. So we see that from this camp, there are a lot of applications that are still in the early stage. Like, for example, we don't yet have a Bitcoin native Oracle that has scaled to the level of Chainlink. And there are a number of players who are trying to do that. And actually to help them scale faster, build faster, rather than spending years in the trenches in order to come up with a sustainable product, with restaking and shared security, we can actually help them bootstrap much faster and shorten this whole growth period or bootstrapping period from a few years to probably a few months. And this is just one example. There are many others that are actually building in a space that using restaking can help them really turbocharge their bootstrapping phase. Now, the second camp we see is outside Bitcoin ecosystem, because shared security, I think, has becoming an increasingly accepted concept of actually, for example, when it comes to redesign the whole tokenomics of new projects, that previously you have to earmark a very significant portion of the tokens to attract and retain, say, your validators and to reward your community. Now, if you replace that with Bitcoin, you actually turn this from a capital expenditure to probably an operating expenditure that's going to be much more effective. And therefore, you can actually put your tokens to better use. And as a builder, you can also focus more on building your product. So we are actually actively talking to players in the subsectors of AI, RWA, dipping, and many other use cases to actually expand and extend the Bitcoin shared security to these use cases. So I think really there are a very wide range of use cases that can be our potential target markets, and we are actively growing this as we speak.
Lovely to hear, and also thanks for the clarification, obviously. But yeah, generally speaking now, you mentioned a couple of times already kind of an outlook to the future with regards to Bitcoin. How do you currently view the Bitcoin ecosystem generally? Bitcoin as an asset class, you mentioned it that it's like one of the best performing coins. It's like actually one of the best performing asset classes ever. So how do you see Bitcoin moving forward? I mean, there are also some concerns around MicroStrategy, that MicroStrategy is becoming too much of a risk. So how do you absorb like all of this information and the current state of Bitcoin?
Yeah, sure. I think definitely it's a positive development to see more and more TradFi institutions are actually onboarding to the idea of accepting Bitcoin as a store of value. And for example, MicroStrategy has mentioned that their only goal is to keep accumulating Bitcoin and never sell it, because they believe in sort of longer term, in a span of years or decades, the overall valuation or value of Bitcoin is only going to sort of appreciate rather than depreciate, because they have actually been consistent with this since last cycle as well. And I think, of course, there are some concerns about, for example, institutions like MicroStrategy holding too much Bitcoin and can potentially pose a threat to, for example, the asset. And on this point, I want to actually bring in probably another angle. When we talk about Bitcoin, there are actually two different angles that we should actually pay attention to. Not only Bitcoin is the biggest and most successful crypto asset, the Bitcoin network has also by far been the most robust, resilient, decentralized, and secure network. So I think the Bitcoin ecosystem development so far has been focusing on how do I better utilize Bitcoin as an asset. But I think also within this sort of a segment of builders, attention has been shifting gradually towards how do I make better use and uncover more value of the Bitcoin network, and sort of leverage and even offer some of these security features of the network to additional use cases. So that's why we see more and more interest, investment, time and effort invested in, I would say, concepts such as BitVM. We already went from BitVM 1 to BitVM 2, and there are also, I would say, leading protocols, be Bitcoin Layer 2s and others, that have actually claimed they have built a trustless or trust minimized bridge using the BitVM technology. So I think there are just different angles to this. And I think as we sort of dig deeper and sort of put in more developer hours into developing Bitcoin DeFi use cases, not only will the asset itself benefit, but I would say rather it's the security features of network that gets sort of multiplied first. And then it's going to reflect and translate into a higher asset value of Bitcoin itself.
Very nice, very nice. And yeah, I think now is the right time to talk a little bit more about your upcoming TG, your upcoming launch. So how's this going so far? Are you excited about it? How's the community feeling about it? Are you on track?
Yeah, well, I think it's probably the most intense period of any project, because there are so many things that are moving and there are so many things that can go wrong. But I think overall our team is super excited about it, and our community are very much looking forward to that. Although I would say now we are in a more volatile and uncertain market condition. I think since the inauguration of President Trump, there was, I would say, very lofty expectations of the new U.S. government. But I think all of that seemed to evaporate when the market crashed not long time ago. And now we are sort of back into this choppy kind of period of time, similar to last year before, for example, Q3, Q4, when the market picked up again. But overall, we feel that once we tide through this period, overall, we are still very bullish on the rest of 2025 and beyond. And although I would say the market is bound to actually go through bull and bear market cycles as it has been in the past, I would say 15 years. we still feel that, for example, from Pell's perspective, we see this as a multi-cycle project. So we are not too concerned actually with the market swings. And actually, I will say in a way it is a sort of external validation to what Pell is doing. Is when the market becomes volatile and when a lot of altcoins actually nosedive, imagine you have actually your own distributed network that's backed by your native token that was just down 80-90% over a span of a week. I think a lot of the TVL or a lot of community, or even from really the network point of view, become much more vulnerable, right? But if you look at Bitcoin, it has probably down by 5%, 10%, and it actually bounced back quite nicely. And if your network is actually secured by Bitcoin, then you are virtually shielded from this kind of market volatility from your network's economic security point of view.
Yeah, I think that's a very, very nice summarization also about the current sentiment. Yeah, we in crypto tend to view the end of the world very quickly, to be honest. So yeah, I believe this is how it always is in the crypto industry. Man, Makoto, I appreciate you. This was a lot of fun. Thank you so much for joining us at this busy time for you, obviously. And yeah, all of the best of luck for the mainnet launch. And as always, guys, you can find the links to Pell Network in the description below. And yeah, Makoto, hope to see you very soon on the show, post TGE and post mainnet launch.
Thank you very much, Juri, for having me. And thanks everyone for tuning in. Very looking forward to the next chat we have post our TGE.